Hey everyone, welcome back to Corporate Decoder, the place where we make sense of corporate filings, so you don't have to. Today we're diving into a filing from Yoshiharu Global, and trust me, it's more interesting than it sounds. It's about warrants and deals, and if you're thinking yawn, just wait until we get to the part where they might have to give investors their money back with interest. Scrolling into scroll, Yoshiharu Global Co. just filed this report called a Form 8K with the Securities and Exchange Commission, the SEC. This report tells investors about important new events. In this case, it's all about new deals the company made to sell warrants to investors. Scroll items have to one entry into a material agreement. Scroll Ken. So what's the big deal? On April 9, 2025, Yoshiharu Global made agreements with some investors. These agreements are called security subscription agreements. The company sold 400,000 more warrants to these investors, and the investors paid a total of $1,000 for them. These agreements include promises and protections that are normal for these kinds of deals. The investors confirmed they are allowed to invest based on rules made by the SEC. Scroll, each warrant is exercisable for one share. Screw. Okay, warrants. What are they? Basically, a warrant lets you buy a share of the company's stock at a set price in the future. In this case, each warrant lets the investor buy one share of Yoshiharu Global's Class A common stock for just $0.01. That's super cheap. There's a catch though. If the company doesn't get approval from its stockholders, it can't issue shares if doing so would give the new investors too much control. Too much control would be 20% or more of the stock or voting power. Scroll, pursuant to the subscription agreement. Scroll, the company has to file paperwork with the SEC to register these shares. This paperwork is called a registration statement. They need to do this within 30 days after they file their yearly financial report. If they're late, they have to tell the investors why and when they expect to file. Scroll, the subscription agreements also provide that should the company scroll, here's where it gets interesting. If Yoshiharu Global messes up this registration process or can't get that stockholder approval we talked about earlier, the investors have options. They can make the company help them sell the shares without restrictions, or they can demand the company buy back the warrants or shares at the original price. Option 2 is even juicier. The investors can demand a full refund of the money they invested. If the company can't pay, they have to prove they can't with an audit. And if the company is late with that refund, they have to pay interest at 8% per year until it's paid. That's a pretty big incentive to get things done on time. Scroll subject, certain exceptions set forth in the warrant agreement. Scroll. Now, what happens if the company can't give the investors the shares when they use their warrants? The investors can buy shares on the open market. The company then has to pay the investor the difference, or just give them the shares and pay them back for what they spent buying shares. Scroll Ec. Our board of directors believes the sales price. Scroll. The company's board says that selling the warrants at 2 tons of 50 ynts each is a good deal for the company. They need the money to stay listed on the Nasdaq Stock Exchange and for other general expenses. Scroll item to 3.2, unregistered sales of equity securities. Scroll, the company is selling these warrants without registering them with the SEC using a legal loophole. The investors are considered accredited investors, meaning they meet certain income or wealth requirements. Scroll. CAM report contains forward-looking statements. Scroll. Okay, legal disclaimer time. The company is saying that anything in this report that looks to the future is just an estimate. Things could change and they might not meet their goals. They point out risks in their annual report as a place to learn more about these risks. They don't have to update these statements unless the law requires them to. Scroll exhibit quarter number. Scroll. If you want to read the actual agreements, they are included as exhibits to this report, including the agreements with CST Company Germany GmbH and Decoder Co. Limited. So what does all this mean? Well, Yoshiharu Global is betting that they can raise enough money through these warrant sales to keep the company going. But they are also taking on some risk if they don't meet their deadlines or can't get stockholder approval. They could be on the hook for a lot of money. Looking at the big picture, this filing suggests that Yoshiharu Global is in a bit of a tight spot. They need cash and they're willing to offer warrants at a low price to get it, but they're also creating potential problems for themselves if they don't execute their plans perfectly. One thing to note is that the company is selling shares at a cent a share, and that looks to be because they need the capital, which suggests the company is struggling to stay afloat. While these strategies can provide much needed capital, they also dilute existing shareholders and create uncertainty around execution. In the long run, Yoshiharu Global's success hinges on not just raising capital, but also using it to generate long-term growth and value. Ultimately, whether this was a good deal depends on whether Yoshiharu Global can turn this investment into something valuable. As of now, it seems too risky to touch with a 10-foot pole. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please like, comment and subscribe for more insights into the world of corporate filings.